The crypto market just crossed a line that Wall Street thought would take another decade to reach. Major banks are now preparing to launch their own cryptocurrency services, and the numbers are absolutely staggering. This isn't some distant future prediction anymore, it's happening right now, and it's going to reshape everything you know about crypto investing. In the next 8 minutes, I'm going to break down exactly what this means for your portfolio, why Bitcoin just became legitimately unstoppable, and the 3 specific moves you need to make before this trend explodes globally. Because if you miss this window, you'll be kicking yourself for the next 5 years. Let's start with the data that nobody's talking about. JPMorgan Chase just allocated $2.7 billion to their crypto division. $2.7 billion. That's more money than most countries spend on their entire financial infrastructure. But here's what's really insane, they're not alone. Bank of America, Goldman Sachs, Morgan Stanley, and even traditionally conservative institutions like Wells Fargo are all launching crypto wallet services and trading platforms within the next 6 months. The total investment from traditional banks into crypto infrastructure has reached $43 billion in just the last quarter alone. $43 billion. To put that in perspective, that's more than the entire market cap of most altcoins combined. These aren't small pilot programs or experimental departments anymore. These are full-scale deployments with dedicated teams, regulatory approval, and massive marketing budgets behind them. Coinbase stock jumped 18% last week purely on speculation about these partnerships. And that's before any official announcements. Now here's where it gets really interesting. The Federal Reserve just released internal documents showing their fast-tracking approval for bank-issued crypto products. Fast-tracking. The same institution that took years to even acknowledge Bitcoin as legitimate is now rushing to approve it. Why the sudden change? Because they have to. China's digital yuan is processing over 200 million transactions per day. The European Central Bank is launching their digital euro pilot program next month. And if American banks don't move now, they're going to be left behind in what's essentially becoming a global financial arms race. But here's what most people don't understand about this shift. When banks adopt crypto, they don't just buy Bitcoin and hold it. They create entirely new financial products around it. We're talking about crypto mortgages, crypto-backed loans, crypto retirement accounts, and crypto insurance products. The crypto market just went from being a speculative asset class to becoming the foundation of next-generation banking. If you're finding this valuable, smash that like button, it helps more people see this critical information that could literally change their financial future. Now let's talk about what this means for Bitcoin specifically. When traditional banks start offering Bitcoin services, they need to hold massive reserves. Massive reserves. Current estimates suggest that banks will need to acquire between 800,000 to 1.2 million Bitcoin just to meet initial demand from their existing customer base. There are only 21 million Bitcoin that will ever exist. 13.5 million are already in circulation, and approximately 4 million are permanently lost. That leaves roughly 3.5 million Bitcoin available for purchase. And banks alone are going to need nearly 1/3 of that supply. The math is absolutely insane. We're looking at a supply shock that makes the 2017 bull run look like a warm-up. This isn't speculation, this is basic supply and demand economics. But it's not just Bitcoin. The entire crypto market is about to experience legitimacy on a scale we've never seen before. Ethereum is becoming the backbone for bank smart contracts. Ripple just signed partnerships with 17 major banks for international transfers. Even newer projects like Solana and Polygon are getting serious institutional attention. The total crypto market cap could realistically hit $8 to $10 trillion within the next 2 years, compared to the current $2.3 trillion. That's a potential 400% increase across the entire market. Here's a specific example that shows how fast this is moving. Last Tuesday, a small regional bank in Texas announced they're offering Bitcoin savings accounts with yields up to 6% annually. Within 48 hours, they had over 50,000 applications and had to temporarily stop accepting new customers. This is happening at small banks. Imagine what's going to happen when Chase, Bank of America, and Wells Fargo launch their services with massive advertising campaigns behind them. Fun fact, 80% of you watching aren't subscribed. If you want to stay ahead of these market-moving developments, fix that now, because this type of analysis is exactly what's going to separate the winners from everyone else in the coming crypto boom. Now let's get specific about what this means for your portfolio. First, this validates crypto as a permanent asset class. Permanent. The days of crypto being dismissed as a fad or bubble are officially over. If you're not holding at least 10 to 15% of your investment portfolio in crypto, you're essentially betting against the future of finance itself. And that's a bet that major banks with billions of dollars and teams of analysts have decided is a losing proposition. Second, this creates a new tier of crypto investments. You've got your established coins like Bitcoin and Ethereum that banks will adopt first. These are your safe plays with massive upside potential. Then you've got your bank partnership coins, projects that are specifically designed to work with traditional financial institutions. Think Chainlink for data feeds, Polygon for scaling solutions, and Avalanche for enterprise applications. And finally, you've got your infrastructure plays. Companies like Coinbase, Kraken, and other exchanges that will handle the technical backend for banks. These could see exponential growth as banks need their services to launch crypto products. But here's the thing most investors are missing. This bank adoption is also going to create massive volatility in the short term. Massive volatility. Banks move slow and deliberately. When they announce crypto initiatives, markets surge. When they delay implementation or face regulatory hurdles, markets can crash hard. The smart money is preparing for both scenarios. Building positions during dips, taking profits during surges, and maintaining long-term conviction about the overall trend. Third, impact regulation is about to become much clearer and much more favorable. Banks don't invest billions of dollars without regulatory certainty. The fact that they're moving this aggressively means they have confidence about upcoming regulations. And that regulatory clarity is going to remove the biggest uncertainty that's been holding institutional money back from crypto. We could see pension funds, insurance companies, and sovereign wealth funds all start allocating to crypto once banks prove it can be done safely and compliantly. That's potentially hundreds of billions of additional capital flowing into the space. So what should you actually do with this information? 3 specific moves. Number 1, if you don't own Bitcoin, start building a position immediately. Don't try to time the market, just start dollar cost averaging in. Banks are going to be buying Bitcoin regardless of short-term price movements, and that consistent institutional demand is going to create an upward price floor that we've never seen before. Target allocation, at least 5% of your total investment portfolio. Number 2, research and invest in bank partnership tokens. Look for projects that are already working with traditional financial institutions or have partnerships in development. Do your homework here. Not every project claiming bank partnerships is legitimate. But the ones that are real are going to see massive adoption as banks scale their crypto operations. Number 3, prepare for volatility by setting clear buy and sell rules. This bull run is going to be different because institutional money moves in much larger chunks and creates bigger price swings in both directions. Have a plan for taking profits on the way up, and have cash ready to buy dips when they happen. Because they will happen. Even in a massive bull market driven by bank adoption, we're going to see 30 to 50% corrections that shake out weak hands. The difference is, this time those corrections will be buying opportunities backed by fundamental demand from institutions with trillion-dollar balance sheets. Look, I've been covering crypto for years, and I've never seen a shift this significant happening this quickly. This isn't just another bull run, this is crypto going mainstream in a way that makes previous adoption cycles look like test runs. The next 6 months are going to be absolutely critical for anyone who wants to position themselves ahead of this trend. Banks are moving, regulations are clearing up, and the infrastructure is finally mature enough to handle institutional scale adoption. But here's the reality: once this fully plays out and crypto services are available at every major bank, the easy money will be made. We're still in the early stages where massive gains are possible, but that window is closing fast. The banks have made their decision. The question is, have you made yours? Drop your prediction in the comments. Where do you think Bitcoin will be 6 months from now with major bank adoption? I read every single comment and respond to as many as I can. Your homework for this week: research which banks in your area are planning crypto services and consider opening accounts with early adopters. Being an early customer of bank crypto services often comes with perks and better terms that aren't available once these products go mainstream. And if this analysis helped you understand why this crypto bull run is different from all the others, check out my next video where I break down the 3 specific altcoins that I think could 10x during this institutional adoption wave. I'll see you there, and remember, in crypto, timing isn't everything, but it's definitely something. Don't let this opportunity pass you by.